We've all had a front row seat for the biggest accounting fraud in human history. When you give your customers money and then your customers, you call it an investment, your customers hand that money right back to you to buy your product. Your money has made a round trip. It's just gone around in a circle. That is not inherently illegal, but when it becomes the sole function of your business and the predominant driver of most of your revenue, it does rise to the level of fraud.
It's the one and only Jack Gamble, who's probably better known on the internet as Nobody Special. Jack, thanks for being here.
Thank you so much, Henry. I appreciate the opportunity.
Absolutely. So again, I want to hear, you've got a couple years experience diving deep into financial documents and press releases, news stories, legal documents about potentially outright fraud going on in AI, which is one of the massive stories in the markets today. But before that, I just want to kind of ask about your backstory. Like, how did you get here? How did you start your Nobody Special accounts and YouTube, and what's your background?
So the name Nobody Special, I do that on purpose because my background is not finance. So I try to be upfront as possible. And I figured what better way than to like stamp it on your forehead. So I called the channel Nobody Special. My background my degree is in mechanical engineering, and I spent 15 years working in commercial nuclear power. So, like I said, no hardcore finance pedigree or anything. I've always managed my own finances and I've always done my own investing. But I really started to get very much into and interested in finance in particular in September of 2019 with an event called Repo Madness, which really, in my opinion, set in motion financially the events that led to all the money printing during COVID.
Yeah.
And I knew enough at the time to know in September of 2019 during a really good stock market, maximum employment, the economy was humming along. And then all of a sudden, abruptly one night, the Federal Reserve started printing money out of the blue. I knew something was wrong there. Couldn't really put my finger on it. So I started going to sources outside the traditional financial press to understand that, because I've learned since then the financial press is really nothing more than cheerleaders and salesmen for Wall Street. Their primary function is to sell financial services to their viewers. And so you rarely get a clean, unbiased representation of what's happening in finance in the financial press until it's too late, I should say. So, through COVID and the money printing and the inflation that ensued, I started getting more and more interested in finance, started rambling a little bit on Reddit, and was enjoying that. The first video I ever uploaded on Reddit, I actually messed up the upload like 15 or 16 times, and then I gave up. And then I realized the next morning I woke up, I had over 500 notifications on my phone because apparently one of those uploads was successful. I don't know which one. And it was getting quite a response. People were really communicating and commenting and liking it. I was surprised, So I stuck with it and then eventually launched the YouTube channel. Around the middle of 2022, I started to realize I was spending more time YouTubing and I was not giving my day job in nuclear the attention it deserved. My boss in nuclear was a really nice guy. I didn't want to do that to him. So I took the leap of faith and decided to start doing this full time, which brings me here.
Wow. Good for you. In a quick tangent, there's something about engineers who can understand finance better than finance people. I mean, Lynn Alden, I'm sure you're familiar with, it's a background in engineering. Preston Pish, who's a big Bitcoiner, who's a value investor before that, was an engineer. Michael Saylor, another obviously huge Bitcoiner, was an engineer. Whenever I listen to engineers speak about how the financial system works, it makes a lot more sense than when finance people do. I don't know what that is.
Lynn and I actually went to the same college.
Did you?
I never knew Lynn. I think we went at different times, but she did her graduate work at Rowan University in New Jersey, which is where I graduated from. So,
cool.
Yeah. Some engineers are able to communicate. Most can't.
Gotcha.
Engineers are quirky, socially awkward generally. Sometimes we can talk and explain things, though.
Well, whoever breaks through can speak as well. So that's good. All right. So let's talk about what you've been finding in AI. So how did you start smelling something fishy, which going back a couple of years now, and kind of where are we now?
So my work with AI began in 2023. But really, the story begins in 2022. There was the tech wreck of 2022. All the big, they call them the Mag 7 now, all the big internet names, their stocks were selling off brutally in 2022 as inflation was skyrocketing. Uh, Big tech tends to derive most of its value from future earnings. And when there's inflation, future earnings become less valuable because the dollars they're denominated in becoming less valuable. And so big tech needed something. They needed a shiny new thing to gin up investor enthusiasm. And Wall Street needed something as well. And push comes to shove. Sam Altman abruptly in November of 2022 launches ChatGPT. He did it without even telling his board of directors he was going to do it. A fun anecdote, his board of directors found out via Twitter that he had taken their product public. And so began the AI mania.
Yep.
Now, AI was just, this new Silicon Valley hype story. Silicon Valley is notorious for overhyping new technologies. So that wasn't really a problem until the summer of 2023. And Nvidia reported their earnings in August of 2023, and they were unexpectedly spectacular. Nvidia had been doing well up to that point, but they just all of a sudden they blow away their earnings when they report. And in particular, their data center segment, which is where their GPUs and this AI hardware lives, beat their expectations by exactly $2.3 billion. And it turns out right before that quarter was announced, this company nobody had ever heard of called CoreWeave had borrowed precisely $2.3 billion to buy NVIDIA's GPUs. And it turned out NVIDIA themselves was an investor in CoreWeave. And so that struck me as a little odd. Okay, here's this magnificent quarter, and it perfectly lines up with this company that borrowed exactly that amount of money, pumped it right into NVIDIA, and that some of that money came from NVIDIA themselves. That doesn't smell right to me. And so I started digging into this company, CoreWeave, which no one had ever heard of, and nobody was asking any questions about it. You see what I did there? Nobody was asking questions. And the more I looked, I just said, oh my God, these guys are financial degenerates. And the people that were funding them were financial degenerates. And I started making videos about this, warning people like, hey, I can't prove outright fraud is going on here, but look at the background and the history of the people that are doing this. And look at the suspicious flow of money here. Somebody smarter than me with more access than me, maybe people with subpoena power, need to start looking at this because everyone and their brother is investing in the same thing right now. And this stinks. And those videos got a lot of views, especially on Twitter. They got millions of views on Twitter. And the reaction from the financial press, I woke up one morning a few days after I released these videos, and there was a piece in Market Watch that said, don't get your investment advice from Twitter randos.
No way.
And it was personal attacks targeted at me, did nothing to dispel any of the flags that I had raised about the history of these guys. Didn't mention the sleazy hedge fund that was backing CoreWeave, didn't mention round tripping revenue. It was just nothing but personal attacks against me and some of the other researchers who were talking about this. And that story got picked up by almost every financial media outlet in the country. And it didn't even mention me by name, didn't mention any of the things I said. It just said, hey, there's this guy out there saying a thing about NVIDIA, ignore him. And here we are 2 years later, and it is exactly what I warned about. Now everybody is admitting it, and it's unfortunately for most people, it's just way too late.
How do you think that happens? Is it like NVIDIA's PR team and NVIDIA is such a popular stock, and anytime you talk about them on the mainstream media, people are going to listen so that their PR team can just go out and say, hey, squash this, and people are interested? Or do you think there's some deeper mechanism for trying to...
Well, I keep this thing here for just such an occasion. I put this on every now and then. A lot of people had a lot of money invested in that story going away.
Yeah.
Right? And a lot of people were very quick. And I tell you, I made videos and I said, hey, any journalist out there who wants to know anything, I will give you all of my notes, everything. It's all open source. It was easy to find. This stuff that I'm going to talk about what I found about these CoreWeave guys, it took me 5 freaking minutes of Google and LinkedIn to find this stuff. And that just tells me it was so easy to find. That tells me I was the only one in the world looking, which is why I had to make the video. And then the message from the journalism industry was don't look.
Yeah.
It was anti-journalism. I was just blown away with that. And so, I mean, I hate to be all conspiracy theorist, but here we are, almost $20 trillion in stock value later. A lot of people have made a lot of billions of dollars. Far worse things have been done for a lot less money than that. So
Yeah. And I mean, Nvidia is the most valuable company in the world right now, right? Is that
by a huge margin, over $5 trillion.
Right. And I honestly, I mean, sometimes I talk about history and all sorts of stuff on this podcast. People may not know that. They've probably heard of the name now. I would have said 2 years ago, people might not even heard of the company. It's the most valuable company in the world. And then all these tech companies account for some ridiculous amount of the actual gains in the market, right? Like the rest of the market's flat or down, and it's 10 companies that are going anywhere. So yeah, there's a lot riding on it, I would imagine.
Yeah, and there's also concentration risk that a lot of people don't realize. You know, the Mag 7 as they're known, which is, you know, we won't count Apple because they're not really spending money on AI, but Nvidia, Microsoft, Amazon, Meta, Google, who am I missing? There's one more. Maybe Tesla is another one. They're all spending so much money on AI, and their valuations have now risen so much that somebody who has somebody who's like a set it and forget it at work. Yeah, I've got my 401k and it goes into mutual funds. I don't really know what's in there, but I take the cautious approach. Those funds tend to just spread out across the S&P 500. But the S&P 500 is made up of a bigger percentage of just a small number of companies now, as far as its total value, that people don't realize have all together passively piled into the same 7 companies.
Yeah.
Everybody in the world owns the same 7 companies now.
Yeah.
So if I could, before we get into the mechanics of the accounting gimmicks and everything they're doing, I came up with a story from my friend Joe Brown. I gave this presentation to one of his groups to help people kind of understand how this accounting fraud works, why I think it's accounting fraud. And I used the metaphor of a little girl in a lemonade stand. And forgive me, I'm going to read a little bit off a script here just to make sure I get my story right. I won't do this the whole time, I promise. There's this ambitious little girl named Samantha, and she wants to start a lemonade stand on Saturday, make a little bit of extra money in front of her house. And like any good dad, her father wants to help her out. So he gives her the money she needs to start her lemonade stand, buy the lemons and the sugar, build her stand. Innocent enough. But this is no ordinary family. On opening day, Samantha sets up shop. And again, dad really wants to support her. So he buys the first glass of lemonade. Hey, that was pretty good. How about another? How about another? And another. At the end of the day, business is booming, and Samantha has sold out all of her lemonade. She sold 20 glasses at 50 cents each, 1 glass to her neighbor, and 19 to her dad. But Samantha miscalculated. Each glass of lemonade cost her $1 worth of lemons and sugar to make, but she only sold them for 50 cents. If she wants to open again tomorrow, she's going to need more money to make more lemonade. Not to worry, dad's got deep pockets and a plan. So dad gives her more money to make twice as much lemonade tomorrow. Sunday comes around. Wouldn't you know it, Samantha sold 40 glasses of lemonade on Sunday. That's 100% growth. She sold 1 glass to her neighbor and 39 glasses to her dad. But there's a problem. Her losses are adding up. She needs more money to stay open. But that revenue growth, that top line revenue growth, it's really good. And dad has a plan. On Monday, dad takes Samantha to see Uncle Frank, the hedge fund manager. Dad tells Uncle Frank about the explosive top-line revenue growth. By 2030, lemonade will replace water as the drink of choice, he tells Uncle Frank. And Uncle Frank is sold on Dad's plan. He wants in. He gives Samantha thousands of dollars to buy lemons and sugar in exchange for an equity stake in the lemonade stand, as well as for a pile of 40 coupons for free glasses of lemonade. On Tuesday, Samantha sells 80 glasses of lemonade, 1 to her neighbor, 39 to her dad, and 40 to Uncle Frank, who paid with his lemonade credits, his coupons. The redeemed lemonade coupons, though, they're counted as revenue, and thus Samantha's top-line growth, it's still 100%. The demand is insane. On Wednesday, Dad takes Samantha to the bank. They borrow $100 billion against Samantha's future cash flows. On Tuesday, Samantha takes the lemonade stand public at a $500 billion valuation. Dad backstops the IPO by buying $250 million worth of stock in her lemonade stand. Now, what happens on Friday? This story is patently ridiculous, but this is no different than what we have seen for the last 2 years. We have all had a front row seat for the biggest accounting fraud in human history. And you can subtract lemonade and put in GPUs and AI hardware, and that's what they've been doing. And that's called round tripping. When you give your customers money, and then your customers, you call it an investment, your customers hand that money right back to you to buy your product. Your money has made a round trip. It's just gone around in a circle. That is not inherently illegal. Some call that, vendor financing. But when it becomes the sole function of your business and the predominant driver of most of your revenue, it does rise to the level of fraud. It's exactly what caused the dot-com bubble to burst. And it's exactly what they've done now with AI. They're all doing it, all these big players, especially the hardware guys.
Wow. Yeah, so the lemonade coupons are the data center credits, right? Which is essentially like a made-up currency in this world.
Correct. Yeah.
So
I just did a video about that on my channel, actually. For example, when Microsoft bought a stake in OpenAI, the headline was Microsoft invested $13 billion in AI. Now, nobody knows exactly how much cash, but the estimates I've seen say it's about only $1 billion of actual dollars was given to OpenAI. The remaining $12 billion was data center credits, coupons for free rentals of the data centers that Microsoft has been building. Of course, Microsoft has been building those data centers by buying the GPUs from Nvidia, inflating Nvidia's growth. Now, when those data center credits are redeemed by OpenAI, who loses money like a drunken sailor, by the way, OpenAI is nowhere near profitable. Same thing with Anthropic. None of the AI companies are profitable. But when they redeem these data center credits, Microsoft counts it as revenue. And so Microsoft's revenue increases. It's just their own money going around in circles. They didn't actually make any money. They actually lost money because they have the hardware costs. They had to buy it. They have the power costs, which electricity prices are going higher vertically right now across the country.
Yep.
Poor people's utility bills are going up to finance this stupidity. And everybody's doing it. Amazon does it with Anthropic. Google does it with Anthropic. CoreWeave does it with their own customers. Nvidia does it with CoreWeave. Nvidia invested in 49 of their own customers in 2024. 49 different companies Nvidia gave money to just so those people could buy Nvidia's product. And then Nvidia's like, the demand is insane for our product. Nvidia is the demand. It's like that old Married with Children episode decades ago when Peggy Bundy became a Bonnie Bright girl. Bonnie Bright was like the Mary Kay thing. And Al found out Peggy was making all this money because Peggy was the one buying her own cosmetics in exchange for commissions. And that's exactly what Nvidia is doing. And Microsoft and Amazon and Google, they're all doing it.
Man. Well, so let's try to poke some holes in your arguments from a couple different perspectives. One would be, and again, tell me if I'm wrong, but isn't it kind of the playbook in these tech startups like Uber or something lost money for years and years? I think they're profitable now, and they basically intentionally lose as much money, gobble up as much market share as they can. Investors backstop them through all those losses. They get through to the other side, and then they kind of own the market. And that's clearly, they tried it with WeWork, it didn't work. But like the Ubers of the world, that's how they intentionally do it, right? So is there a chance these companies make it through this? Like, it is all shenanigans, but no one actually gets put away. They make it through and they end up profitable in 5 years, and turns out
that whole nobody gets put away. Put a pin in that, because I don't want to miss that one. That's an important thing.
Okay.
But that's a legit challenge, and I have heard that from a number of places, that tech companies are often not profitable for a long time while they capture market share, and the profit comes later. And let's take Facebook as a perfect example of that, right? Facebook lost money for years.
Yeah.
And then they only became profitable within the last 10 years. Now they're immensely profitable. Right. That didn't stop the dot-com bubble from bursting, because at the end of the day, all of the dot-com, the dot-coms, the pets.coms and all of them, but one of the big factors of the dot-com bubble was the hardware build out. your Sun Microsystems, your Cisco, the people who were laying fiber optic cable across the country. They were all engaged in vendor financing, which is round tripping, right? They were giving their customers money so their customers could buy their cable, buy their servers and everything, build the internet infrastructure. The internet was losing money. Now, the internet didn't die. It didn't go away, right? It did survive. It now dominates the global economy.
Yeah.
But that didn't stop people from getting wiped out in 2000 when the dot-com bubble burst.
Yep.
So same thing happened with railroads, the South Sea bubble, the Mississippi bubble. There's always, whenever you get a new technology and a new build out, you get this irrational enthusiasm, too much, too fast. And I do think AI is here to stay. I think in a much smaller version of its current form. I don't think it's about to put us all out of work and take over the economy. It honestly, I use it a lot. It's stupid. It doesn't do basic math. It's getting lawyers in trouble by hallucinating, making up random court cases. It's doing some dark things, convincing people to hurt themselves, young people. So I mean, and look, the internet had its dark corners. It still does. But at the end of the day, does it make money? Does it generate a value for the user? And the answer is a resounding no. MIT did a study recently checking on all of these pilot programs that companies have rolled out, right? Like every middle manager who FUMU'd his way into the boardroom is out there right now saying, we're going to lay off all of our HR people and replace it with AI. We're going to lay off the IT and replace it with AI. And they're doing it in some cases. 95% of these companies are losing money on these endeavors. It's being promoted like, oh, it's the next wave of human productivity and we're going to make all this money and become leaner, meaner, more productive. It's not. They're becoming less productive. And there was another study that came out recently. I can't remember. Better Up was the name of the outfit. Brene Brown is a famous member of Better Up's board. They did a study. They polled over 1,100 people from several sectors, all different sections of the economy, but white-collar office workers on the use of AI. And 40% of them reported receiving what became known as work slop, right? We're all familiar with AI slop on Facebook, the stupid fake videos.
Yeah.
This is happening in the workplace. You've got lazy people who are over-relying on this technology as a crutch, and they're producing what at a glance looks like legitimate work. But when you actually look at what it's producing, it's actually no value add garbage, in some cases, negative value add garbage. And it is creating messes for other employees to clean up. In particular, the work slop flows downhill. When bosses produce this garbage, it makes a mess in the workplace. It's causing social problems in the workplace. But they found that 40% of people reported receiving work slop in the last month. Of them, it took about 2 hours for each occasion to clean up the work slop of lost productivity. Based on self-reported salaries for a company with 10,000 employees, they estimated they're losing $9 million a year because of AI work slop. And this is being sold to the investing public and to us that this is going to make us more productive and more profitable. The opposite is true. The people who use this product are losing money based on mountains of data now. The people who produce this product are losing money. The people who build the data centers and rent them to the AI startups, they're losing money. The hardware manufacturers, Nvidia, Broadcom, those names, they're the only ones making any money here. How long can they keep making money if everybody downstream of them is losing it? And the answer is the only way that can possibly continue is with a giant leap forward in the quality of the technology. And we are hearing increasingly more ridiculous talking points from these hypesters in Silicon Valley about this. And I think really when ChatGPT 5 was released by OpenAI a few months ago, and people were like, this sucks. This is no better than 4. That's when alarm bells really started going off. And right about that time is when these beyond ridiculous circular accounting gimmicks between Oracle and OpenAI and Nvidia really became just like hundreds of billions of dollar numbers. That's when even the financial press had to admit, oh, crap, this guy we all told you to ignore 2 years ago, he was right. There's nothing of substance behind this. It's just an accounting gimmick. Sooner or later, this is gonna burst.
So is your sort of base case, you're looking at it like it's like these other technology revolutions where we have this hype, we have a massive bubble burst, everyone goes, oh, we way overhyped it, what the hell was that? And you come back 10 years later and it actually is a big
Yeah, it
useful
might be
part.
10 years. It might be. I mean, really, if you take away all the silly Wall Street BS, this really started in 2017 when a couple of Google DeepMind engineers released a white paper called "Attention Is All You Need," named after the Beatles song. And they discovered a formula, mathematical equation for assigning value to words in a string of text. It was a very unique approach, and
Yeah.
it was a major breakthrough.
Yeah.
The software that they created, they called transformers, which based on the 80s cartoon, engineers are dorks. That's just how we are. But it was groundbreaking. It really was. People realized when they created this code and then they ran a sample of it, they're like, this is almost like talking to a human being. This is a huge breakthrough. And it really was. The Attention Is All You Need white paper was a huge breakthrough. And in 2022, 5 years later, mind you, when Silicon Valley and Wall Street realized they needed the shiny new thing to stop the sell-off in tech, they decided to launch an experiment. Let's take the Attention white paper from these DeepMind engineers and let's give it all the data we can steal, and let's give it all the computing power that money can buy. In order to finance it, we're going to launch the biggest accounting fraud in history. And the thought was, the DeepMind breakthrough was so big, the Attention Is All You Need breakthrough was so big that if we bombard it with these resources, we can achieve what they call AGI, or artificial general intelligence, basically a machine smarter than a person.
Yeah.
It's now 2025, almost 2026. That experiment has failed. It has clearly failed. It's just not that smart. It did get a lot smarter for a short period of time. And they took that and they were able to make some kind of neat things, image generation, video generation. It's kind of cool. This also brings all kinds of societal concerns along with it. But at the end of the day, it isn't getting any smarter now. They have stalled their progress, and it's too late because they sold this story and everybody invested in, and now they need to figure out a way to tell us, oh, it's not working. Sorry.
Yeah, I guess that is fair. I mean, it got so much better. Like I was using some tools before ChatGPT came out, and I wrote an article about this saying they're terrible. And then ChatGPT came out, and I did go, oh wow, okay, this is actually doing stuff that's useful. And then it was getting better and better. And I agree, the most recent version, it's plateaued or slightly down. So I wonder if it has stalled out. But let's I mean, it sounds like Nvidia is at the core of this entire story. So could you give us some background on Nvidia and their CEO, Jensen Huang? Like, what's his story? Where does he come from? And then Nvidia too.
So there's some interesting backstory with Nvidia. Fun fact, Nvidia replaced Enron in the S&P 500
No
after
way.
Enron collapsed.
That is
poetic.
That is poetic.
Yeah, can't make that up. That is a fact. Nvidia has a documented history of fraud. That's also important to note. It goes back a ways, but in 2003, their CFO, Christine Hoberg, had to settle with the SEC for accounting fraud. They had cut 2 deals with their suppliers in order to manipulate their earnings to make them look better. What they did, or what Christine Hoberg supposedly did, acting alone, obviously, she cut a deal with the vendors to say, we want you to undercharge us for the materials we need to make our chips. And it's okay because we're going to cut a separate deal that says you can overcharge us next quarter to make up for it. And she withheld that second deal from her independent auditors. And so Nvidia reports a quarter and it artificially inflates their revenue by 15%, artificially inflates their earnings by 15% because their cost of goods sold went down. And then a few quarters later, that other deal kicks in. All of a sudden, the cost of goods sold skyrockets. Nvidia earnings take a dive. Nvidia shareholders get wiped out. The stock loses more than 50% overnight. And it was fraud. Now, Jensen Huang was still CEO of the company back then. Christine Holmberg said it was just her. So what do we need to believe? Jensen Huang right now, who is being portrayed in the media as she's like signing boobs at conferences, like he's the smartest man alive, he's a genius, but he was too stupid in 2002 to know that his CFO was manipulating cost of goods sold, inflating his earnings by 15%. These two things can't be true. So he's either a dirtbag and he knew what was going on and did nothing to stop it, or he's an imbecile and he's incompetent. Is Jensen Huang, the CEO of the $5 trillion company, incompetent? I don't think so. I think he's smart. I think he just is morally bankrupt. By the way, you said, where does he come from? He's a Taiwanese American. He's an American citizen of Taiwanese descent. And his company is also blatantly, illegally selling these GPUs to the Chinese for use in military applications, which will almost certainly be used to attack and invade his home country of Taiwan.
Oh, wow.
And American ships and Marines will be in the crosshairs of whatever AI drones are being used by the Chinese. So, in my opinion, he's also a traitor. And there's ample evidence of these illegal GPU sales to China. So that's the background on Nvidia. Also in 2018, they had to settle with the SEC for fraud because they were hiding how dependent their GPU sales were on crypto miners. They were reporting their sales to crypto miners as gaming revenue. And they were downplaying how exposed they were to crypto. And then when the crypto bubble burst 2 bursts ago in 2018, Nvidia sales took a dive when they had been hiding from their investors how dependent they were on crypto miners. So the SEC fined them again for that. Nvidia settled while admitting no wrongdoing. The regulators are incompetent and inept. And that's one reason why I think, as much as I'd like to see it, I think nobody will go to jail for this. I think everybody will be hurt by it, but nobody's going to go to jail because we just treat white collar crime with the kid gloves in this country.
Yeah. So how does that compare if they've had 2 cases of fraud in the last 20 years or something? How does that compare to like other does Facebook have 2 or 0 or
no?
So no other.
To my knowledge, Facebook has none. Apple has none. Okay. I mean, when you get that big, you're going to have regular interactions with regulators, but CFOs being forced to resign and step down and settle with the SEC for fraud. No, not for the most valuable company in history. Reputation is supposed to be a thing.
Yeah.
Maybe I'm just old fashioned and naive. And before I told you to put a pin when you said, will anybody go to jail? One of the things in my original videos about CoreWeave that really made me go, whoa, was the involvement of a hedge fund called Magnetar Capital. They're the biggest investor in CoreWeave. So most of this money that Nvidia has made, or a lot of it, has come from CoreWeave, and CoreWeave got the money from Magnetar Capital. Yep. Now, there's a famous scene in The Big Short where Steve Carell's character, his hair's all messed up there at a sushi restaurant with this Asian guy who was a CDO manager. And Steve Carell is like, I think you're just an incredible POS. He leaves dinner and he tells his guy short everything that man has ever touched. That happened. That guy's name, that Asian guy he was talking to, was a guy named Wing Chow. He was a CDO manager. His job was to assemble CDOs, which are basically like leftover parts of bonds they couldn't sell. You put it into a big box and then you sell it to investors. And he was doing this with mortgage bonds, and Wing Chow's CDOs, he was actually assembling them for Magnetar Capital. Magnetar Capital hired Wing Chow. He says, I want you to put the bonds in the box, and then we'll sell them to investors. Magnetar Capital was handpicking the bonds that were going to go into the box. Wing Chow was happy to do it because Magnetar was paying him big bucks. And it turned out when the global financial crisis happened, the CDOs that Wing Chow had assembled for Magnetar Capital failed at a 90% rate, whereas the rest of the market failed at about a 65% rate. So this was a category of garbage. Wing Chow made a particularly pungent garbage. And it turns out while Magnetar Capital was selling these handpicked CDOs to their investors, they were betting against them by buying credit default swaps on them. So in layman's terms, they created a deliberately sabotaged investment, sold it to unknowing investors, and bet on its failure. They made hundreds of millions of dollars in profits when the people who were buying them lost billions, and it made the GFC a lot worse. And that became known in Wall Street as the Magnetar trade. These are the people who have propped up CoreWeave. That right away, without knowing anything else, should have been enough to get the media to say, whoa, something's really wrong here. Instead, the media said, pay no attention to Jack. Now, the other thing that stuck out at me about the CoreWeave guys, within 5 minutes, I go to CoreWeave's website. I look up who their CEO and their founders are. I go to their LinkedIn page, and I realize, okay, they used to be crypto miners. That's a little interesting. There's some shady guys in crypto mining. But before that, they ran a hedge fund. Okay, these guys are hedge fund guys and crypto miners. Some sleazy overlap there. And then you go all the way back, and they all used to work at a company called NatSource. And NatSource was the biggest proponent of cap and trade in the Obama years when they were trying to push carbon credits and a carbon tax in the United States. It ultimately failed, and NatSource faded from existence after that happened. But these guys were the biggest players in the United States in the carbon credit market. And CoreWeave's current CEO, their CSO, and one of their board of directors all used to work at this company. One of them was the CEO of the company. And it turned out when they worked at NatSource, they were trading carbon credits through shell companies in the Cayman Islands. And the only reason we know about this was because of something called the Paradise Papers, which was this big leak. Somebody hacked this sleazy lawyer in the Cayman Islands who was helping wealthy elitists and criminals all over the world hide their wealth from the tax man. And in this big data dump, we found a network of at least 20, possibly 60 shell companies that the CoreWeave guys used to run carbon credits through in the Cayman Islands back when they ran NatSource. Now, that's not outright illegal, but the only reasons to do that are illegal. Tax evasion, money laundering, transfer mispricing, all things flagged by Interpol as red flags of financial crimes involving carbon credits. And these CoreWeave guys were all doing this. And that was, again, the subject of one of the videos I put out. And again, the financial press said, don't listen to this guy. Nobody in any of these articles that were trying to discredit me even mentioned the word shell company or carbon credit or Magnetar. Nobody said anything about it. They just said, don't listen to this Twitter rando. He's immature. He doesn't know what he's talking about. He's an idiot. Personal attack, personal attack. And I was pleading with journalists to please look into this. Maybe I'm wrong, but somebody asked the question. Nobody asked.
Wow. So we switched from carbon credits to data center credits, and the rest of the playbook.
Shiny thing to shiny thing. With the stop and crypto in between.
Right. The shit coins where the venture capital companies prop up a shit coin, dump it on investors. Yeah.
Oh, another one too. Yeah. Sorry, there's so much fraud. I lose them sometimes.
Yeah.
When the CoreWeave guys got out of crypto mining, they were called a company called Atlantic Crypto at this point. They sold all their GPUs. They were mining Ethereum. They wanted to get out of Ethereum mining. They sold all their GPUs to a company called Sysorex, ticker SYSX. And if you look at a price chart of Sysorex, it is a classic pump and dump. They sold their GPUs to Sysorex in exchange for shares in Sysorex, not money. Little weird. And then they did what's called a reverse triangular merger with another company that, and simultaneously people start pumping this stock in message boards. This is around 2021, 22. And the stock goes up like 13,000%. And then the CoreWeave guys dump all their Sysorex stock and the stock crashes and goes to zero. It was a pump and dump scale. So they've also run pump and dumps on penny stocks before.
Wow.
And nobody cares.
These are real stand-up guys, huh?
They are financial degenerates of the highest order.
Seriously.
And they are the ones who are propping up NVIDIA's sales here. And reputation is supposed to matter. NVIDIA, their own reputation of fraud. These are the worst people in Wall Street have gotten together with the worst people in Silicon Valley. And I don't want to sound too doomy here, but they've stolen our 401ks. When this goes belly up, it's people's retirement accounts that are going to take the hit from this.
Yeah.
It's 401ks and IRAs and to a lesser extent pension funds.
Yeah. You talked about Magnetar. You've talked about Nvidia. You mentioned, I think, quickly, like the Amazon Anthropic partnership, Google Anthropic. Could we do some like quick hitters on the headlines? What are the deals these companies are making? What's the headline? How much money is being invested? And then what's actually happening behind the scenes? Let's just try to get through a couple of them.
So OpenAI has said we need $1 trillion to buy all the compute we need. All right. OpenAI last year, don't quote me on these numbers, but last year they lost, I think it was $8 billion on $3 billion in revenue.
Wow.
So maybe it was $5 billion. They lost twice as much money as they even took in. So their profit margins are like more than negative 100%. In short, OpenAI does not have the money to buy all this compute that they've said. And so what does OpenAI do? They sign a deal with Oracle.
Yep.
And they say, okay, Oracle, we're going to rent, just grabbing numbers here, but it was something like $500 billion of your data centers between now and 2032. And Oracle says, okay, on our next quarterly earnings, look at our remaining performance obligations, which is just basically like that money OpenAI has promised us that they don't have. And they say, hey, Wall Street, we have $500 billion in remaining performance obligations. And Wall Street says, wow, let's buy Oracle stock.
Yeah.
So Oracle stock rallies like crazy on this. All right, Larry Ellison, by the way, the founder of Oracle, was an early investor in Theranos. You may remember that one, the whole Elizabeth Holmes company. Again, reputation should matter.
Yeah.
But hey, Oracle says we're going to have to build hundreds of billions of dollars of data centers in order to provide all this compute to OpenAI, which OpenAI can't afford to buy. Oracle doesn't have the money to build these data centers. So now what happens? Oh, Nvidia says we're going to invest $100 billion in OpenAI. We're going to, as part of Project Stargate, the silly thing that they got together with the Trump administration. So Nvidia is going to give $100 billion to OpenAI. So OpenAI will have some money to rent the data centers for Oracle. So Oracle will have the money to buy the chips from Nvidia. They're all losing money. OpenAI is losing money. Oracle loses money. The data centers, between the rising power costs, the hardware costs, and the depreciation expense, which they're all lying about because these GPUs only last for about 4 years, they're all losing money, but NVIDIA's making it hand over fist. But it's just NVIDIA's money going around in a circle. It's their own cash.
Wow. That is wild.
And let me just say one thing real quick about, you asked for another headline. Today, Amazon earnings. Amazon stock is ripping today. It's up like 13% the last I checked. Amazon reported like a 13% increase in revenue. That's just data center credits. That's the money they gave to Anthropic coming back to them, and they reported as revenue.
Wow.
But their operating income only went up by $11 million. 11 million with an M. That is a rounding error, not even a rounding error. A rounding error of a rounding error for Amazon. So why did Amazon beat earnings by such a huge margin? They reported earnings per share of $1.95. The market was expecting $1.57. Well, on paper, they increased the value of their investment in Anthropic by $9.5 billion. They didn't actually make $9.5 billion. They just went on their paper and said, before Anthropic was worth this, now it's worth this. Anthropic, who lost $3 billion last year. So Amazon manufactured their revenue by round-tripping data center credits. They manufactured their earnings by arbitrarily increasing the valuation of Anthropic. They spent $118 billion last year on CapEx. That's money they spent to build data centers, all goes to NVIDIA. NVIDIA reports big earnings. All right, so $118 billion invested, but the actual operating income for the company only went up by $11 million. At that rate, it will take 10,727 years to break even on that investment. At the rate their operating income is increasing versus their CapEx spend, their capital investments. The GPUs will last for 4 years that they're buying. So how does that end? I mean, it's the lemonade stand. The numbers are as ridiculous as I made it sound in that story at the beginning there with the lemonade stand. And there's a greater fool, though. This whole market is dependent on what's called greater fool theory. And greater fool theory is the belief that, okay, I'm going to buy an asset that I know is overvalued, but that's okay because I can find somebody even stupider than me to buy it from me at an even higher price. And that has worked so far.
Yeah.
Eventually, you run out of idiots to buy the stock. It's not today, but it's coming.
So timing of all this stuff, because this has not crashed yet and no one's been put in jail, or no one high profile, I guess, is so these GPUs or whatever are the machines are only going to last 4 years, you say. Is that the limiting factor? Like within 4 years, this has all come crashing down? Or how do you look at the timing?
So again, let me preface this. If I could tell you when,
Yeah,
I'd be a very
you wouldn't
wealthy
have to be
man.
talking to
All
me.
right. So, I am amazed we've gone this
Mhm.
far. So when I couldn't tell you when.
Yeah. Yep.
Now the thing about depreciation, right? That's a regular expense. When you take the money that you've taken in, you subtract your power costs, you subtract your interest, you subtract your labor and everything. But also this hardware loses value. And all of these big tech companies, most of them anyway, are using what's called a straight line 6-year depreciation cycle. They're saying the value goes down by the same amount every year for 6 years until it gets to zero. Um, does high end computer hardware really lose its value like that? Or does it lose most of its value in the first year? And then by the fourth year, it's essentially worthless.
Mm.
It's typically how computer hardware operates, especially when you push it and run it as hard and as hot as they're running this high performance compute stuff. So there is one company out there called Nebius. That's one of these data center builders, a hyperscaler or neo cloud. They're using a straight line 4-year depreciation cycle. They're being more honest. Even 4 years is ambitious, in my opinion. But what that means is they're also inflating their profitability, which is still negative. But by understating their depreciation expense, they're making the business look a little bit better. It still looks awful, but they're making it look a little bit better. When that proves to be wrong, when they realize these H100, which is the last generation of GPUs that were bought in 22 and 23, to a lesser extent 24, when they realize by, say, 2026, nobody will pay to rent these anymore, they'd rather rent the Blackwells or the Rubens, the next generations that are coming out, they're going to have to depreciate that hardware. And that means a massive sudden drop in earnings for all the companies that have built these data centers. I can't tell you when that's going to happen, but I can tell you in my opinion, they are overinflating the useful life of this hardware. And somewhere probably between 3 years and 6 years from the start of this bubble is when that particular reality will set in. Maybe the bubble burst for some other reason before then, but in my opinion, it can't go beyond 6 years, which would mean 2028 at the latest.
Yeah.
And at the rate we're going with the scale of these numbers and how big they're getting and how silly they're getting, I cringe to think about how big the numbers will be by that time if it doesn't stop sooner.
Yeah. Wow. So then they're just not even profitable on their own right now. So would basically electricity prices have to come substantially down for them to figure out how to make money, or they get somehow way more efficient chips, or like
That would
what are the
help.
options to get through this without it all crashing?
So the options are electricity going down would help, but electricity is going up in a straight
Yeah.
line. And they're also making unrealistic promises about nuclear power, which I actually do know a lot about
Right, which
nuclear
is
power. I
crazy.
worked in that industry for 15 years. It does not move on the timeline that they're promising.
Yeah.
Analysis paralysis, like it's a libertarian's worst nightmare, the red tape in nuclear. The NRC will not sign off on these reactors they're promising in the timeline they're promising. They're making promises about small modular reactors. There has never been a commercially operating small modular reactor in the history of the industry. And they're acting like we're going to build hundreds of these in the next 2 years. Not going to happen. I say that with 100% confidence. That's not going to happen.
Yeah.
So power is going to go up. That won't do it. There could be a major breakthrough. And in my opinion, several are required, but we could have another breakthrough on the order of that attention is all you need white paper. That just makes it so much better suddenly where it does live up to the hype.
Mhm.
That could happen.
Yep.
But right now the market is operating on the assumption that is guaranteed to happen. It's not. And it hasn't happened yet. And they promised us it would have happened already. So it could just get suddenly better. And then the people that are the end users of this product actually do start saving and making money off of it, in which case the investment would be justified. I don't think that's going to happen. And then, of course, people could just keep getting dumber and we could keep making this problem worse. And we could continue pouring money into the campfire while Sam Altman and Jensen Huang tell us stories. That's really what this bubble is. We're burning money while Silicon Valley tells stories by the fire. Sooner or later, people are going to realize it's what it really is. And I think GPT-5 and the disappointment there has gone a long way to that. They're hiding the financials. You can only hide fraud for so long. Sooner or later, it comes back to haunt you. We've got problems building in crypto. There's a lot of overlap between crypto miners and AI data centers right now. So you could have a problem in the crypto industry, could bring down some of these data centers, which could trigger a major correction in the AI stocks, or vice versa. AI going down could take the crypto miners down, could trigger an event in the crypto market. Those two are joined at the hip here. Inflation could come back, which would devalue the future earnings that the market is banking on right now. So there's a lot that could go wrong. They need a giant leap in the technology, another one, a huge one, to be able to make this industry viable, and it's got to happen soon.
Wow. Well, speaking of Sam Altman telling stories by the fire, it sounds like, I wrote up all my questions for you earlier, but I saw yesterday, and we're recording this on Halloween. I saw yesterday that OpenAI is planning to IPO sometime in the next few years at some $1 trillion valuation or something. What do you think of that headline?
Well, like I said, OpenAI loses money, so we're going to give a $1 trillion valuation to a company that doesn't make money. And the other thing I would tell you is when you take a company public, you have to issue what's called an S1 filing. And in the S1 filing, you open up your books and you let the whole world see under the hood. And it's basically like the financial equivalent of the end of a pharmaceutical commercial. Like, we dare you to take it, with all the side effects and all the things that could go wrong. They're dancing in the field and living their best life. Side effects include death, unbearable pain, baldness, loss of vision and hearing, like live hell on earth. That's what an S1 filing is for a company's financials. And I don't think Sam Altman wants to give the world that look under the hood. A lot of people really want OpenAI to IPO. $1 trillion, he's drunk. He's drunk. Again, don't quote me on the numbers. I think they lost something like $5 billion on $3 billion in revenue. How do you get $1 trillion valuation from that?
Yeah.
All right. Like, I lost $5 last year on $3 of income of revenue. And so I want you to value my company at $1,000.
You just get dad to buy more lemonade. That's it.
Dad, I hope you like lemonade, because that's what you're getting, Dad. Yeah. Uncle Frank, keep them coming.
Yeah. Okay. Do you think we missed anything in this story, or are there things across markets, economy, that you're looking at right now that really have your attention?
We didn't even talk about Hyperscale Nexus. That was a company that came and went. It was this weird story about a merger of an AI startup is going to buy a penny stock cannabis company. This was early last year. The Hyperscale Nexus was going to buy the American Cannabis Corporation. Long story short, everybody involved in that company had a history of fraud. I did a video about this, but the CEO of the company was a convicted money launderer, and he just happened to share an office with a guy named Daniel Kinahan in Dubai. And Daniel Kinahan is the head of the biggest fentanyl cartel in Europe. These people were killers, and they were laundering drug money, trying to launder drug money through an AI startup. And the Chinese were helping them because they were going to route those GPUs they were going to buy with laundered drug money to the Chinese so they could use it for their military. And I did a video about this. And 3 days after I did the video, the company disappeared from existence. They canceled the merger and canceled other plans, and nobody cared. This guy, the world told, speaking in third person now, pardon me, this guy, the whole world said, hey, there's problems in AI, broke up $1 billion drug laundering business, and nobody cared. That was a tough pill to swallow.
That's great.
I was walking around with a gun on my hip for a couple of weeks after that story, because I didn't know what was going to happen to me. I found this story and I didn't know what to do with it. I had an anonymous tip help me with this, help me develop this story. So I want to give him a little credit. But I had to put my name and face attached to that, and I had to screw up $1 billion drug laundering operation.
Holy crap.
And I just thought somebody would have cared about that. Nobody gave a shit. Pardon my French.
Yeah.
Sorry to curse on your podcast, but
why do you think that is?
We must protect the bubble at all costs.
Yeah.
The narrative needs to be preserved. If it finds out that levered up drug money was inflating the bubble, it would have made people look elsewhere.
Does this does this all roll up to the amount of federal debt we have or something where
The government is now helping this bubble. All right?
it,
President Trump has
yeah,
invested a lot of political capital in Project Stargate and this bubble and his many meetings at the White House with Jensen Huang. So I would not be surprised to see an increasing flow of tax dollars to try to prevent this bubble from bursting. I think it's criminal, but I would not be surprised. And this is not TDS, all right? I mean, I voted for the guy, so you know, this is my side I'm talking about here. I think
yeah.
he is going to regret what he's done with crypto and AI. I think it's going to be a huge liability for him in the midterms.
But I mean, so basically, like, we owe so much debt. If the stock market goes down at all, tax receipts go down, we're even further in the hole. It has to continue to go up. Like, I mean, Luke Gromen says something like, I think it's Luke Gromen says something like that the 401ks are just like politically so important that they continue to go up or everything kind of collapses. So the incentive structure is to just turn your eye at all this stuff as long as it keeps going up in value, right? I mean, is it as simple as that?
Yeah, they need to endlessly inflate the currency.
Yeah,
Or if a bubble does burst, which I think is inevitable, the Federal Reserve will turn the money printer back on to prop the market up.
of course.
It is virtually guaranteed. They've shown us their true colors time and time again. The second things get hard, 2008, COVID, the dot-com bubble, even 2023 when the banks failed. They turned on the money printer every time. They lowered interest rates and they spun up the money printers through various different mechanisms and acronyms, all for the same thing, increasing the money supply.
Yeah.
And right now, it's a whole other subject, but there is this worry about the private equity and the private credit industry,
Mhm.
which does overlap with AI to a big extent. They are using our 401ks as exit liquidity. They're selling us their bags of crap, not telling us what's inside and what it's really worth. And that is our retirements are right now bailing out Wall Street. And the reason why, because the last time the bailouts of Wall Street were very unpopular. So if first our retirements bail out Wall Street, then the government is not bailing out Wall Street, they're bailing out our retirements. Nobody's going to be opposed to bailing out grandma's annuity or her pension or my IRA or my 401k. It'll be a Main Street bailout. But the reason you need it is because Main Street has already bailed out Wall Street. And that's something else that President Trump, I think, will regret because he signed an executive order for alternative assets to be allowed into 401ks and
Mhm.
IRAs. Those alternative assets are worthless crap that Wall Street needs to get off their books by any means necessary. And they're selling it to our retirements. And most of the people that are making these decisions are the people we have trusted, the CFAs, the financial advisors, people we've trusted to manage our money. They're the ones that are making the decision to buy this crap. And they're doing it because they're being offered, true story, free vouchers for Uber Eats to attend a seminar on the opportunities of alternative assets.
Man.
That's what they're doing. They're bribing people, whining and dining. It used to be you take the guy to the strip club and you show him a good time, and that's how you get him to invest somebody else's money in the crap you're selling. Now it's vouchers for Uber Eats.
That was like
So,
you get like a McDonald's burger for taking the COVID vaccine.
yeah. So, yeah, the going rate for selling us out is shockingly low, apparently.
Well, what a place to end. We'll stop right there. Why don't you tell everybody where they can follow you and keep up with your work? It's daily. It is very insightful, and you absolutely put in the work on everything you claim and the stories you do.
Thank you. I appreciate that. Best place to find me is on YouTube. I am at Nobody Special Finance is my channel on YouTube. Also, everything I put on YouTube, I also put on Twitter, which is JG_nuke on Twitter. I'm also on Spotify, Nobody Special Finance on Spotify. So everything I put out goes out to those three platforms. So hope to see some of you guys there. And let me just say again, thank you, Henry. I appreciate the opportunity to try to get this message out. I have been trying and failing for the last 2 years to warn people about this. I do think it's too late, but at the very least, people should know it's coming. They deserve to know.
All those links are in the show notes right below. And Jack, thanks again.